This is the video you have been waiting for. I'm going to share today the performance of my dividend stock portfolio. So if you've been here a while, if you're a subscriber, you've probably downloaded my dividend stock portfolio already. If you have not, I will include in the description below a link so that you can do so. But what I want to do in today's video is I actually want to share the performance as well, because you know my portfolio, you know the percentage allocation of the various positions that I own, all 40 positions. I want to take some time today to actually share how have my positions done? How have they trended over time since I have purchased those positions? And most importantly, what is my dividend yield on cost? So get ready. This is going to be a really fun video today. So I get this question all the time, dividend investing versus growth investing. And a lot of people think like, hey, if I buy a dividend stock, I'm just getting a dividend. I'm not going to see any growth. And vice versa, a lot of people think if I buy growth stocks, I'm going to get all this growth over time. Now, personally, I don't like looking at things in that worldview. I don't like looking at things as this versus that. I like looking at it as all-inclusive. And in fact, my personal dividend strategy includes a component of income because I invest for dividends that I can use to pay the bills, dividends that come in from world-class companies while I sleep at night, dividends that literally will fund my entire lifestyle in the future. But in addition to having that income component, my dividend stocks, they've done really well. They've grown over time. They've experienced capital appreciation. So I like to look at my strategy as a dividend growth strategy. It's a combination of both. I get both. I get the best of both worlds. And the way I look at it is, why the heck would I want to be a growth investor? The way I look at it is, if someone's a pure growth investor, they ignore the dividend component. Yeah, they get some growth, but they're foregoing the dividends. They're foregoing the income. By being a dividend growth investor, I get both. I get the growth. I also get the income. And quite frankly, I'm buying companies that are world-class companies at reasonable valuations, at reasonable prices, whereas sometimes these growth investors, they get caught up in these companies that, in my opinion, are overpriced. They're overvalued, and so they're getting some growth. They're buying into some growth, but oftentimes they're not buying assets at good valuations. And so the purpose of today's video, quite frankly, is I want to dispel the rumors behind dividend growth investing, because personally, I have experienced huge, massive dividends and also incredibly impressive growth. And so the way I did this today is I'm going to go through my top 15 stocks one by one. I'm not going to go through, quite frankly, my entire portfolio. Maybe I will do that in a future video, but in order to prepare for today's video, to make it digestible for everyone watching, I'm just going to focus on my top 15. These are my top 15 favorite stocks of all time. And also, to simplify things in terms of showing the numbers today, I'm looking at my first tranche. So most of you know that I like to average into dividend stocks over time. I will buy a little bit here and there, and I will keep averaging in over time. I like to make lots and lots of purchases, and I'll include a link in the description below to a video I did on that about my personal buy history, my buy patterns, my personal transactions. I have made a lot of transactions, a lot of buy orders over time. But to simplify things for today's video, and quite frankly, because my record keeping needs some updating, so my record keeping is not fully where it needs to be. I need to spend some more time updating my tracking spreadsheet to make things easy for me and for you. The way I'm doing this is I'm looking at my first tranche. What that means is, for Johnson & Johnson, for example, I'm sharing the first lot, the first tranche that I bought. Not all of the tranches, not every lot that I purchased over history, but literally the first one. I'm looking at the first one, and I'm also just looking at my top 15. Now, if you are having trouble following along with this, don't worry. I'm actually going to send an email. Everyone who has downloaded my personal dividend stock portfolio will receive a complimentary spreadsheet that complements the other one that includes all this data and more. And so if you're already on my newsletter, you've already signed up for my dividend stock portfolio, you will receive an email that contains all of this information as a follow-on spreadsheet to the portfolio. If you've never downloaded my portfolio, I encourage you to do so. Link is in the description below, and you will receive my complete dividend stock portfolio as one spreadsheet. As another spreadsheet, you'll get this performance data, this performance study. And so I want to first just jump into the numbers here. J&J, on my first tranche, I'm up 132%. And in terms of yield on cost, I'm at a 6.17%. So the 132%, I think that's pretty self-explanatory. I bought my first tranche here. It's J&J is now trading up here. I have gained on paper 132%. So clearly this is a growth stock. It's not just a dividend stock. It has grown very handsomely since I started purchasing it, and I love it for that. And yield on cost might need a little bit more explanation. What this is it takes my the current yield of J&J, the current dividend. So I look at the quarterly dividend, I multiply it by 4, so the income that's coming through right now in 2019, and I divide that amount by my purchase price. It tells me how much am I yielding on the amount I paid. It doesn't matter what the current yield is, because current yield doesn't affect me. What affects me is how much I paid, which is a lot less than the current market price. And so I've talked a lot about here on yield on cost. If you're trying to wrap your head around this concept, check out my other videos. I've done a lot of videos on this, but it is my most fundamental concept for dividend growth investing. I'm all about the yield on cost. And so my yield on cost for J&J is a 6.17%. Not bad at all. It's surely growing, and that will continue to grow over time. I personally consider it a big win when a yield on cost goes above 10%. I consider it a home run once the yield on cost gets above 20%. Eventually, my goal for all of my positions is to have it upwards of 20%, but that will certainly take time. It'll take more compounding, more dividend increases over time, and this is what I look at. Anyways, I want to move on. Pepsi, my number 2 favorite stock of all time. I'm up 91% on my first tranche. So again, nice growth story. My yield on cost, 5.82%. McDonald's, my number 3. I am up 157%. So a lot of people think, I hear this all the time. I love it when people tell me this. Oh, millennials don't go to McDonald's anymore. Oh, McDonald's is out of favor. That's a sad old story. It's not growing anymore. No, it is a beautiful company trading at a reasonable valuation that continues to grow. And I am up 157% in terms of capital appreciation on my first tranche. I'm living proof that this is a growth stock. 6.31% yield on cost. And this is the thing again. Growth investors who are just buying stocks for their growth don't buy stocks that tend not to pay dividends. They don't get that. They don't get any of that dividend income. And quite frankly, my dividend income is pretty big these days. And I can't imagine not having that. I love it. It's one of my favorite things, favorite inventions of all time. Why would I want to forego that? I'd have to be, I don't know. I just don't understand. United Tech, I'm up 39%, 3.07% yield on cost. This one's not up quite as much, but it's a newer position for me. Some of these, I don't show my purchase date in here, but these have all different purchase dates. Moving on to Clorox, I'm up 126%. 5.59% yield on cost. Pretty cool. Duke Energy. Here's a fun one. Duke, I have a long history with it. Before it was Duke, it was Progress Energy. I used to own Progress Energy and then got merged into Duke. A lot of people think, hey, utility companies, like Ian, I get it. You talk about J&J, yeah, growth story, fine. But utilities, a lot of people think, yeah, I just buy utility. It's just for the dividend. It's never going to grow. Again, this is living proof. I'm up 126% on Duke, and I'm yielding 8.37% on cost. So not only do I got the massive yield on cost that one would expect with for owning a really world-class utility for a long amount of time, but I'm up a huge amount of money, 103%. And so, yeah, just another fun takeaway that some of these people that say dividend investing, you'll never see any growth. It's these boring utilities. Even with the boring utility, it is showing huge growth. So moving on, realty income, I'm up 67%, 6.33% yield on cost. Another fun one, realty income. A lot of people think, oh, it's a real estate investment trust, REIT. That's really cool. I own some real estate, but it's not going to go anywhere, Ian. It's just going to show you your dividends. No, I'm up 67% in terms of capital appreciation while getting my huge dividends while I sleep soundly at night. I want to take a pause here before I go through the rest. One point I want to underscore in this video is I own world-class companies. I do not settle for anything but the best. This is really important. I've been watching some other videos on YouTube. I don't want to point fingers. I don't want to name names. But a lot of people out there, a lot of investors, whether it's in, quite frankly, not even dividend stocks, they're looking at other types of assets. A lot of people are out there right now chasing assets. In 2019, they're trying to find all this yield. They want to find shortcuts. I've been at this stuff for a long time. I've been investing for over 20 years. The bulk of my portfolio, what you're seeing here, has been built up in the last 10 years. And the reason for that is we own a home. We're homeowners. And before that, we owned another home. And so over the years, I've had to actually sell my portfolio, or at least big parts of my portfolio, to fund down payments. And so what you see here is really the current iteration of the portfolio, what I've been building in the last 10 years. And quite frankly, I've been doing this for 20 years, but my biggest earning power has been coming in the last 10 years. So that's where I've been pumping as much money as possible into the market. And so anyways, though, the point I'm trying to make, this took me a lot of time and dedication to get where I'm at. It'll take me even more time and dedication to get where I'm going. But there's investors out there on YouTube, and they're like advising, sharing their experience in buying just junk assets, junk. And so what I'm telling you guys, I like to buy world-class assets because I can sleep at night. I'm looking at this thing multi-generationally. I'm looking at what can I pass on to future generations. I'm building a machine. I'm building something very robust. I'm building something that can stand the test of time. Quite frankly, life is too short to buy junk. Life is too short to accept nothing but the best. People are asking me on my YouTube channel, Ian, why do you set such lofty goals? Maybe you won't hit those goals. I only live once. I want to shoot for the stars. And if I come up a little short, fine. At least I'm going for my dreams. And so the fact of the matter is I'm going for my dreams. I'm buying quality. And my message to those watching today, if you're watching other videos on YouTube, just use your brain. Think about the message. Think about what the various investors are doing. And look, I don't have all the answers, but what I do know is I can sleep soundly at night, that even if the crash comes, and I'm going to do a video on this, it is coming, and it's going to come with a nasty vengeance. Get ready. Good for dividend investors, so we can average all the way down and all the way back up, get a better weighted average share price, great deals ahead, but it's coming. And all I know is I can sleep really well at night knowing that in the worst of times, people will be going to McDonald's and they will be buying Big Macs. And so the fact of the matter, though, is I'm not out there chasing yield on junk assets that, quite frankly, I wouldn't be proud of. I'm only owning stuff I am proud of because I only live once and I shoot for the stars, for the best. So moving on, Procter & Gamble. Boy, I love Procter & Gamble. I did a video about Gillette here. So much controversy. Oh, I hate Gillette. It's challenging my manhood, this and that. Gillette is hitting the ball out of the park. Procter & Gamble is hitting the ball out of the park. Just like I said a few months ago, the reason Gillette is doing this stuff in advertising is to sell more product. They have some of the best minds in the world working in marketing. They are using their data, they're using their analytics, and they are using it to supercharge their company into the future and to drive more money for me, for the shareholder. And so anyways, Procter & Gamble, I'm up 72%. I am yielding 4.90% yield on cost. Coca-Cola up 50%, 5.13% yield on cost. 3M is a new position for me. This one I first started purchasing in 2018. I'm up already 9% with a 2.93% yield on cost. Starbucks is a weird one. I actually made some nice gains on Starbucks. A few years ago, I sold all my Starbucks. I did that, I believe, to fund an angel investment at the time. Anyways, I rebuilt my Starbucks. I think it was in 2017. So since then, my Starbucks, I'm up 29%, and I'm yielding 2.44% yield on cost. Cedar Fair, a new one that I bought in 2018 for the first time. I'm only up 3%. I'm yielding 7.12% yield on cost. Really, really love Cedar Fair. It's one that I'm adding to right now. So moving on. Okay. Thug Life, everyone. Sin stocks. Check out the description. I'll link to my Sin stock guide. Altria, ticker symbol MO. I am up 250% on tranche number 1, yielding 20% yield on cost, the holy grail. I have reached the holy grail of dividend investing with this stock. I did it with Reynolds American too, but that one got bought out. Wish it didn't, but maybe it's stronger with BTI. We'll see. Anyways, look, this is an industry, quite frankly, that everyone says, oh, it's on the decline. Less people are using these products, Ian, that Altria sells. Well, the industry's been in a decline, quite frankly, since the 1970s, but this is the best performing stock of all time. The best performing, according to many studies, the best performing stock of all time is not Amazon, it is not these growth stocks, it is the one that is yielding 20% on cost for me and giving me the huge capital appreciation. So Thug Life, dividend growth investing, in my opinion, that's the way to go all day, every day. Moving on, Kimberly-Clark up 93%, maker of Huggies diapers, near and dear to my heart. 2 kids at home, we go through a lot of Huggies diapers, and so up 93%, 6.48% yield on cost. Last but not least, Southern Company, up 18%, 5.41% yield on cost. Anyways, I take a simple average of all of this data. I take a simple average. On average, again, for my first tranche is that I purchased these 15 stocks, my top 15 favorite stocks of all time, I'm up 83%, and I'm yielding 6.41% on cost. Again, I'm not doing this video to brag. My overall performance is not this good because, again, this is the first tranche only, but it is indicative of what's to come. All of my tranches will get here over time because I'm in this forever and I'm in this multi-generationally. Time is so powerful. And so that is the big message today, is that time is powerful. The message is that dividend investing versus growth investing. No, dividend investing is not just about the dividends. Dividend investing is about growth and dividends. And quite frankly, I would argue that a lot of these growth rates, capital appreciation, are better than some pure play growth stocks. And the reason for that is I believe dividend stocks are better managed oftentimes than growth stocks by the management teams. Management teams of these growth companies, they got money sitting around, they're just going to spend it, they're going to squander it. Dividend companies, they're more shareholder focused. They're seeing, how can I give that money back to you, Ian? How can I put money in your pocket? You're the shareholder, I report to you, I work for you. I'm going to give you the money. Whereas at the growth stocks, they're like, I don't care about the shareholders. I'm going to take this money and go out and spend it on something fancy. And so different mentality, different way of doing business. I'm for the dividend stocks all day, every day. And I'll tell you, I live in the Silicon Valley. I've worked at these tech companies. I've had many partners with different tech companies, big tech companies. And I'll tell you, some of the parties are lavish. Some of the offices that these companies have, they are lavish. They're too lavish. They're wasting your money. They're wasting the shareholders' money, these growth investors' money. They don't even know it. They're wasting your money. And so moving on, time reduces risk. Power of time. But what I want to say here, and this is a transition into my next video or one of my next videos. Follow me on Twitter. I'm sharing some of the intelligence that some of the best economists in the world are sharing. I'm retweeting it. The crash is coming. Look, everyone, the crash is coming. It's coming. It's coming hard with a vengeance. It's because of the debt. The government debt, the corporate debt, the individual debt. The debt is out of control. The debt is far gone. It is out of this world. And the growth, quite frankly, the growth rates are not there. There's this weird stuff. Barron's just published a article that, hey, the bull market's never going to end. Whenever you see major publications doing something like that in the 11th hour of the longest bull market of all time, you know there's problems. One of the economists I just followed shared this inflows. In the last month or quarter or whatnot, the data shows that the inflow of money into the S&P 500 index fund, it is the largest it's been. And so the retail investors, they're getting all excited. They're jumping into the market. We know, unfortunately, that they always do this at the end of the market. And so the fact of the matter here is all these numbers could get slashed, but the yield on cost doesn't. This is why I invest for dividends. Ultimately, I only care about this column. This column is nice. It feeds the ego, but it doesn't matter because I'm never going to sell. But the point of this is yield on cost, pay bills all day with dividends. And so if the market goes down, what's really great is I'll get better starting yields. I'll get to add to my positions. I love averaging down. I hope the market goes down. I'm having an awful time buying stocks here in this overpriced market. And thankfully, I've had a lot of home repairs here lately. And so I've had a little less money to invest lately. And It's probably for a good thing. This market's just overpriced. But look, if you're just starting out, you're new to dividend investing, let this encourage you. And the message for myself, for everyone, is I believe that averaging in is the best strategy. Dollar cost averaging slowly over time. Take advantage of the ups and downs in the market. Right here, 2019 late stage bull market, if I had a lump sum, let's say of a few $100,000, $1 million, whatever it is, I wanted to plop it into the market, that'd be crazy. I would never do that. What I would do is take it, average it up. But again, that's only speaking of my personal experience, just personally sharing my journey. Anyways, check out the description below, download my stock portfolio, you'll get all this data as well. And I'd be curious, what do you think on this whole debate, growth investing versus dividend investing? It just kind of sometimes drives me nuts. You probably tell in the video today. Love to hear in the comments below. Thriving community, please subscribe, everyone. Really important to me that you subscribe to my channel. Means the world to me. Best way you can thank me. And before I leave today, in terms of a disclosure, I own these stocks. I actually own one that I didn't mention, or that I don't list here, but I mentioned BTI as well. So I am long BTI. Ticker symbol BTI. I'm long Johnson & Johnson, ticker symbol J&J, PepsiCo, ticker symbol PEP, McDonald's, ticker symbol MCD, United Tech, ticker symbol UTX, Clorox, ticker symbol CLX, Duke, ticker symbol DUK, Realty Income, ticker symbol O, Procter & Gamble, ticker symbol PG, Coca-Cola, ticker symbol KO, 3M, ticker symbol MMM, Starbucks, ticker symbol SBUX, Cedar Fair, ticker symbol FUN, Altria, ticker symbol MO, Thug Life, Kimberly-Clark, ticker symbol KMB, and Southern, ticker symbol SO. And I own all of those stocks in my personal stock portfolio. I'm proud to own these world-class assets and not junk. And so in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. All right, everyone, please subscribe. Please subscribe. It means the world to me. I'll see you in the next dividend investing video, and stay strong out there. Let's enjoy this cash flow that is coming in from dividends.